Welcome back, traders and true believers of Forex trading. Welcome to McDuck Trading family. In our previous video, we talked about the importance of economic calendar as a part of the fundamental analysis. We went into basic details and we will be going in depth in another video soon. Today we are going to be focusing on technical analysis instead. Technical analysis can be very useful because it will allow us to predict certain market changes before they happen. We will derive these predictions from previous chart trends, probabilities of other market conditions, and our previous experience. Over time, these predictions will remove the need to overanalyze the direction of the market. This will in turn allow us to recognize consistent and rational areas of interest. Now, believe me fellow traders, this is not as hard as it seems. I will explain how you can predict and follow the course of a business trend to make a profit. The methods of technical analysis are usually referred to be a type of black magic used to predict the changes in the market. Now, what those outside of the trading community do not know is that we are not trying to predict the future. Instead, we are trying to create an approach that will have a high likelihood of success, situations where a pattern or market change can be expected. Now, let's be realistic. If we could reliably be able to predict market changes all of the time, we'd all be spending much more time in a Porsche 911 driving around and having fun, instead of spending a lot of time in front of our computer. And we all know that it would be practically impossible to be able to predict everything on the market. I am sure that many of you have your own strategies for entering and exiting the trade. If you don't, however, you should decide on one before pressing the buy and sell button. Technical traders use other tools such as movable average convergence divergence, the relative strength index, or the commodity channel index together with identifiable chart trends that have occurred in the past with a certain calculated outcome. It doesn't matter if you're a novice or an experienced trader, you can use trading signals from websites such as TooTrades. They have already incorporated many technical methods into their system that will help you get an edge in trading. More experienced traders usually have a better idea of what the outcome of the trade will be while it plays out. If the trade goes against them as soon as they enter and it doesn't turn around within the next few candlesticks, the odds are that their analysis wasn't correct. However, if the trade does go in their favor within the next few candlesticks, they can start moving the protective stops in order to lock their gains as the position plays out. We have to track the trade in real time and adapt accordingly. Also, we have to make sure that our feelings won't get in the way, because that might cause a deviation from our initial plan. We made our strategy before we have taken the position, and now while the trade is going on, we have to use that as an anchor. Since we already have a strategy that involves no emotion, during the trade we have to rely that as much as possible. Make sure to reduce your emotions, but don't eliminate them entirely. We're all just humans, and it will be impossible for most traders to trade like a robot, no matter how good they are. Now, objectivity is essential to trading. Technical analysis does provide many views of predictions in a clear manner. However, with everything else in life, we have no guarantee of success. However, if we stick to a trading plan and reduce our emotions to a minimum, we can greatly increase the probability of making a winning trade. With time and experience, we will be able to learn how to predict the direction of your trades and improve your chances of achieving better profit. That's all for today, guys. Please make sure to like, share, subscribe to the channel, and I'll see you soon in the next video.